Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. Before I get into today's, I just want to say he is risen. Thank you, Christ, for everything you've given. And I wish all my followers a very happy Easter. Don't forget, tomorrow is the reason Christianity exists. Anyway, so you all know that drill. Hit that like button. Subscribe if you already haven't. And let's get into today's video. I wanted to do this article, and it's from Talk Markets. I first found it on Zero Hedge. And this is a big development. And this is one of the reasons they lie on the job markets. It's not so much for the voters. Most voters probably don't even follow the news or the economic data or even know what it is. They might know what it is per se, but they don't know much about it. But in this market, it's the Philadelphia Fed. Now, this isn't Zero Hedge. This isn't some insane conspiracy talk that they say. This is the Philadelphia Fed. And it says the BLS has overstayed the tune of 1.1 million jobs. And talked about the fraudulent economic data. One example is the native-born U.S. citizen, no jobs since 2018. None of the new jobs have gone to them, and that's been offset by the amount of foreign-born. And it even talks about how all the new jobs created since 2022 are part-time jobs, and there's actually a decline in full-time jobs. Now, most Americans on the job market would know that, as they probably can't get full-time jobs and they have to work 2 or 3 part-time jobs just to make up for that. And then let me see what so basically what it says, I just highlighted this. The BLS has overstated payrolls in 2002 by 1.1 million. And then in 2023, overstated payrolls by 800,000, which would make very anemic growth. And this is why I said the economic data, is this priced into the markets? No. This is why I said it's very important just to follow the headline. 2023, did it price it into the markets? No. 2023 is a bullish year for stocks. Now, if they reported honestly, it wouldn't have been a bullish year. It would have been, so they always say, where's the recession deniers or the recession screamers? Where's the recession? Well, they lied. We are in a recession. Just the BLS lied about it. And that's what happened. And that's why I say you got to look at the actual economic data, what it says on face value when trading. Because, yeah, they're going to lie. I do think they're going to get to the thing is, sentiment does rule at the end of the day. And if this becomes mainstream, the market's going to finally stop listening to the economic data. And that's the thing. The U.S. is considered a safe haven for people around the world. And they do stuff like this, they're going to lose their safe haven status. And the market won't believe it anymore. And I think we're getting to that point. And case in point, Thursday, now the economic data look okay. And I think that's why the markets went up. I was looking at something new, and it's the near-term spread. I forget exactly what it's called. Let me... sorry, I was just near-term forward spread, and that has turned negative. And every time it's been negative, it's been in a recession, sort of like the real yield curve. And the Fed looks at that more so than the yield curve, and I think that's why the Fed's cutting rates. My friend Rahul from AIH Finance and AIH Sports brought that to my attention. That's what I say. I'm always arming myself and theoretically, just in case any of those, this is theoretically arming myself with knowledge for the financial markets. Don't take it that as literal where I'm buying weapons. It's not for the average audience member, but just in case someone, a Fed or whatever, is watching. No, it's theoretically, I'm always arming myself with knowledge to navigate financial markets. Anyway, getting back, the Philly Fed payrolls overstated at least, and it says in the article 800,000, but that's for last year, and it was 1.1 million. And there would have been a recession if they reported honestly. but we don't, and that's what I'm saying. But I do think they continue this, there's going to be a day where it's not going to matter what the BLS and whatever says. And so that's the first thing I wanted to get into. But gold is really on a bull market. I've said this repeatedly. Now's a good time. I think I was like the only one last year was saying it was still in a bull market. You had one technical analyst saying it's going to retest 1600. One said the Dow might break out and gold might be in a bear market for 30 years. A lot of these analysts. That's the thing about technicals and fundamentals. Every fundamental analyst knows it's going to break out, and it knows it's going to go. I have to question myself. When I first started investing in gold, in 2009, it went up, and after 2011 through 2015 bear market, I really questioned myself. I thought I was wrong, and I basically left my old podcasting company. I was thinking, maybe there's a possibility. But when gold broke back above 1900 and 2000, I was like, yeah, it's on a bull market forever. I mean, not forever, but it's going to be on a bull market. So my near-term forward is I think there'll be a breakout, then of severe depression. There'll be forced selling, and gold's going to come with it. After this run-up, gold will probably come down to 2,000, silver to 21. And then I think there'll be the next quantitative easing. And I think that's when a lot of it will go into commodities. Gold will go into another bull market similar to the 2000s. I think this run up, I plan on selling, a lot of my gold stocks, or half of them at least, and paying down some debt. I'm not hugely into debt, but just so I'm debt free during this crisis. And that's what I'm planned on doing for now. But I think gold is going to... And the other thing I wanted to get into is if you look at the junior mining, which I'm more of a specialty in the mining sectors. One day maybe I'll have a newsletter or write with someone. I don't know exactly yet. I do have a Substack account. I haven't written on it, so I'm not going to post it or anything. If I start writing on it, then I'll push a link down for you to follow, and I might have a subscription-based newsletter. I don't know, or I might, depending on, I might, write, or even if I have a subscription, I could collude with somebody, whatnot, spin-off products. I don't know. I don't know what the future holds, but for now, it's just YouTube videos, and maybe I'll add, maybe I won't. Anyway, let's go back to... And the big news was Agronaut Gold was bought out by Alamos Gold. And if you look at the junior miners were completely, have basically bombed out. And I've been trading the junior miners for a long time. In the past 3 years, if you don't have a limit order on some of these juniors, you can't buy them. You can't buy them at a market order. That was unheard of from 2008 to 2011, even 2015. There was so much liquidity, you can do a market order. There's so little money in this sector that if I wanted to buy like Calibri Mining or Lion One Metals or any of these junior stocks, Bear Creek Mining, I have to put a limit order into it because there's so little traded. That's not a sign of a bull market. Or that's a sign of a bear market. And that's not a sign of a top. That's a sign of a bottom in this market. And so that's the first thing I wanted to point out. I remember the 2011. You had stuff like Fortuna Silver trading at $9, $10, $11 a share. You had, which is like $3. You had stocks like Bear Creek going up to $9. You had small stocks that are trading at 30 cents, trading at 9, or we're nowhere near that. That is a sign of a top. It's not what the current state of the mining sector is now. So this is the beginning. Don't get me wrong. There will be pullbacks. In fact, after this upswing, and it might actually come down and retest this. And that's when I think the big, great opportunity for buying. Right now, my opinion of junior mining and gold mining and gold is it's a good trade because there's going to be an upswing. And what the other thing too is Agronaut Gold getting bought out by Alamos Gold. Full disclosure, I own Alamos Gold. I think it's a great company. I think it'll do really well in the next 2 or 3 years or the next 18 months. Anyway, long story short, I think that company, not that company, but I think that's going to start happening in the next 2 months or 3 months. If these junior miners don't catch a strong bid, these mid tiers and senior producers are going to start going down the food chain because these junior miners like Bear Creek, they're trading at 2008 crash levels and they're trading at $1,100-$1,200 ounces, in the uh, gold price. So they might just start going in and buying these, even if it's not fully de-risked, because they'll say, even though it's not de-risked, it's trading at a price of $1,200 to $1,500 while gold's at $2,500 an ounce. We are getting a bargain. Even if we have a 60% over market, we're paying $1,700 an ounce per ounce in a ground for this. This is a huge profitable. So I think if you're a junior miner investor, there is light at the end of the tunnel, in my opinion. It's not investment advice, but in my opinion, and I think Alamos Gold is the precursor, and it doesn't have to be a senior. A mid tier could come and buy it up, and I think that's the beginning of the a trend. So anyway, it's a lot to unpack. Happy Easter, and to all my followers. And if you like this video, hit that like button and subscribe if you already haven't, especially if you watched it all the way through. Hit that like button because if you watched it till now, you definitely liked the video. I'm a nobody. I have 59 subscribers. No one likes me, and you still watched all the way through. So hit that like button and subscribe because if you watched all the way through, you definitely liked the video. You liked what I had to say, and you want to hear more. Generally, people, they don't like it, they'll turn it off, especially when you're someone like me. Not a name, not a famous anyway. So anyway, hit that like button, subscribe, and I will see you next video.